right, good morning, everybody, and welcome to another live session here on Facebook. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Glad everyone is here today. Hopefully, you all are doing well. Before we get started, if you guys can hear me, if everything looks good, just let me know in the comments. Let me know everything's coming in clear on your end. Once we have confirmation, that we'll jump right into it. I see some new faces, some familiar faces as well. So welcome everybody. If you're new, if you've been here for a while, glad to have you all here. To give you a little insight, what we do is every Thursday at around 11 a.m. Eastern, we go live here on Facebook talking about the VectorVest Stock Advisory app. It's one of the most comprehensive mobile apps to help you better your investing. Whether you're a long-term investor looking for retirement planning, or if you're, a short-term swing trader and all in between those two types, the VectorVest Stock Advisory app can really help improve your performance by not only showing you good stocks to be getting into, what stocks you can make money with, but also, when to start easing off the gas, if you will, when to start being more defensive in your portfolio by utilizing the market timing to help you, really nail your entries and exits into the market, and also when to get out of the market as well. So, if that's your cup of tea, you're in the right spot. If you want to help improve your investing, you're in the right spot here today. Before we get started and jump right into things here, good morning, Kendall, Sidra, John, Zan, Ariel, Kat, Austin, Jason, Muhammad, Steve, Clyde, Harry, Ronnie, Johnny, Lewis, that's a tongue twister. Ronnie and Johnny, there we go. Ron, Julia, Donald, Art, Ivan, welcome everybody. Awesome. Glad to have confirmation of that. Brian is asking, hope you will cover spreads. So spreads is one thing that I left out specifically for the fact that it does require a lot of knowledge into options, and there's a lot of different ways to do spreads, but we will be talking a little bit about options here today. I know a lot of people out there trade options, so we will be discussing that a little bit here today as well. Awesome. Thank you guys. Glad to have you all here. So for all the new people here, just to give a little insight on how we do things every Thursday. We first start to take a look at what's going on in the market today. Then we start to dive into our topic. So today we're really going to be focusing on how to protect profits. We're going to cover 4 simple tips that you can use to protect your unrealized gains or protect your profits that you have. If you've been making money, which you should be most likely, making money into this most recent rally that we've had, and kind of concerned about what's going on. There's rumors of a second wave coming of the coronavirus. You have China being hit hard. There's a lot of different, things out there, but, the economic outlook is looking better, at least. You have the Fed on your side. So you have a tug and war between positives and negatives here in the market that can make investors unsure of what's next. And so if you are unsure, today is going to be a good day for you, because we're going to help you out and show you 4 simple things that you can do to help protect your profits and help you keep those stocks if you don't want to get rid of them right away. How long will this be? So typically, Zane, these sessions last 45 minutes to an hour, really depending on you guys. Then at the very end, we always save the fan favorite till the very end, where we'll analyze any stock that you want to take a look at and show you how you can do so in the mobile app in less than 20 seconds. So, if you're on the go, it's a great way to analyze the stock, especially if you have a buddy telling you, hey, this stock is good, this stock is bad. You can go back and check it before you'd ever make an actual decision on that. So the mobile app has a lot of potential to really help you out, help you make money. And that's what we're going to be covering here today. So with that, let's see. Ivan, just simply give our support a call. I don't have things to be able to check that right now. But if you're not getting those invites, give our support a call. They can take a look there. How to take profits as it comes and then reinvest. Exactly. So with that, let's go ahead. Start to take a look at what's going on today and then jump into our topic of discussion. There's a lot to talk about with our discussion here today. So let's go ahead, jump right into it, get started here. So as we can see right now, the market's teetering back and forth between 1 tick into the green and 3 ticks into the yellow. So therefore, caution light is on, and we advocate, using caution when buying stocks at this time. You may want to be a little bit more defensive, and we'll take a look at how we can determine, whether or not we actually should be buying or not right now. In just 1 second. So, as we can see, market is neutral. If you ever want more insight on what's going on in the market, if you're already a subscriber, you can always watch the market guidance videos. Every single night we do about a 5 to 10 minute long video where you can watch the daily color guard report. And then on Fridays, we do a more thorough, detailed version of that video that we do in the weekly special presentation there. So, if you're not already watching these, I strongly urge people, especially if you're new to the stock market or new to the stock advisory app, I strongly urge you to watch these videos on a nightly basis. So that way you can get all the info that you need to make smarter decisions a lot faster, and spend less time having to analyze the market, analyze your portfolio, and all of that. So we scroll down, we take a look at the color guard. Now the color guard is the way that we here at VectorVest utilize or look at the market to identify what's really going on. So it's all based upon the VectorVest composite. The VectorVest composite is an arithmetic indexed average of about 8,200 stocks in the US market. And we feel this gives us a better representation on what's really going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,200 stocks. So it's giving us a better representation on the overall market here. So the first way we analyze it is price, the technical aspect of things, whether you're looking at, direction, what the market is doing. So if the market's moving higher day over day and week over week, you'd see a green light in that price column. If it's mixed, you'd see a yellow light. And if it's down day over day and week over week, you'll see a red light there in the price column. Next indicator we look at is the RT, which is looking at the short-term price trend of the overall market here. It's cast on a scale of 0 to 2. So above 1, market on a short-term trend is up. Below 1, short-term trend is down. So while the market on a short-term basis is still up, as we can see, it has been softening a little bit over the last few days. Whereas June 15th, we were at 1.26. Now we're at 1.21. Then the next indicator we look at is the BSR buy to sell ratio. So we talk about, or every single day here at VectorVest, we give a buy, hold, or sell rating on each stock here out of the 8,200 that we track. These are not just analyst opinions. These are based upon strict criteria that we follow. So that way you can compare apples to apples rather than trying to compare apples to oranges. They're two different analysts and their views on a stock. These buy, sell, and hold ratings give you a systematic approach to really analyzing any individual equity out there. So when the buy to sell ratio is above 1, that tells us there's more buys and sells in the database. So therefore that shows overall market strength. When the buy to sell ratio is below 1, that shows that there's more sells than buys in the database, or overall market weakness. So at 6.55, that tells us there's a lot more stocks that have a buy rating than a sell rating currently, and that there's overall strength in the market. Now, as we've been talking about the last few weeks, I do want to note, generally when the buy to sell ratio is above a level of 3 to 1 or 3.0, that shows the market is top heavy or overbought. Right now, we're double that at 6.55, and actually we're even higher than that just a few days ago. So that definitely tells us the market is overbought, which is why we're going to really be focusing on our topic here today. After the buy to sell ratio, we then get the MTI, which is looking at the market timing indicator. Once again, it's cast on a scale of 0 to 2. And above 1, the underlying trend of the market is up. Below 1, underlying trend of the market is down. Now, just like the buy to sell ratio, when the MTI gets to 1.6 or greater, that shows that the market is starting to look for a top. So, as you can see, it's 1.61 right now, and we have been seeing it at record levels just a couple of weeks ago at the tops of this most recent uptrend. I believe it was 1.84, 1.82, something around that line or around that range, and which also confirms that the market is grossly overbought right now, which once again is why we're going to be talking about how you can protect your profits as well. After that, we then get the trend column, which is going to show two parts of the trend each and every day. The first part, simply looking at what we call the primary wave or the weekly trend of the market. Since it's up right now, that shows that the price is higher on a week over week basis. The second part, simply looking at the underlying trend or reiterating the MTI. So if the MTI is above 1, the underlying trend or the second part of that trend column is also going to be up. And then after that, we then get the calls column, which is really going to stand for our confirmed calls. These are our most conservative signals. Essentially, they're going to be our last signal we get to get into the market and our last signal we get to get out. So for our more conservative investors, as you can see, we still remain in a confirmed up situation for right now. Now, as we mentioned earlier, we did say that we recommend using caution. Well, how do we check on that, and how do we see if, we should go ahead and buy or we should not go ahead and buy? One of the tips we talk about week in and week out here on our Facebook Live is taking a look at the advanced declines. So generally, if we advise caution, we want to see twice as many stocks advancing than declining if the market's moving higher, or twice as many stocks declining than advancing if the market's moving lower. So as we can see, markets are slightly moving higher for right now, but we don't have twice as many stocks advancing than declining. So therefore, we probably just simply hold off for the day, wait for a better buying opportunity to emerge. Because trust me, the market keeps going. There's going to be many more opportunities in the future to get back or to get into the market or get into a new stock or two. And as the old saying goes, patience is a virtue. So right now, it's simply telling us, use your patience, wait for that better buying opportunity to really take advantage of it. But then as we look at the major indices, we do see that they're mixed. The Dow is down slightly. NASDAQ's up 0.2%. S&P is flat, teetering back and forth between positive and negative today. And then the VectorVest composite up almost 0.3% so far. So the Dow, the S&P really lagging so far. The NASDAQ has been one of the only strong suits that we've seen throughout this most recent pullback off of these highs. It's been holding its own ground, but the Dow and the S&P are struggling to really do the same. So with that, that's the market review for right now. Let's go ahead, dive into our topic of discussion. That sounds very conservative for a trader. David, what sounds very conservative? Which part? The advances to declines? Because if you're a swing trader, no, the advances to declines is a great tool to use, especially for that type of investor. If you're a conservative investor, you look at confirmed calls. So, that's the thing is VectorVest covers all different styles of investing, from day traders to swing traders to long-term investors. Regardless of what type of investor you are, we have the tools to help you be more successful in that style of investing. And real quick, before we jump into our topic, right above me, you can see our VectorVest 7 platform. It does come with real time. I get this question a lot. So if you want real-time data, give our support a call, ask to take a look at VectorVest 7 real time. If you have VectorVest 7 real time, that would replace the mobile app subscription. And that would give you mobile or real-time data on the mobile app, as well as all the extra features from the desktop app as well. So with that, now that we've got that out there, let's go ahead and dive into our topic here today. So as we've been talking about the last few weeks, the market has been grossly overbought. If we take a look at the VectorVest composite real quick and zoom in, let's say 3 months, we can see this really nice run that we've had in the market. But we have pulled back off of those highs. We had a bullish harami as of Friday's close. We got a nice little bounce earlier this week, but that have been slowly drifting lower and possibly creating a lower high right now. Now, as we mentioned, week in, week out, lower highs tend to lead to lower lows. So we're still kind of, patiently waiting, seeing which way it's going to go, because it could just be a temporary pullback and we take out that previous high just a couple of weeks ago, and then the market keeps rallying. Great, that's awesome. But if we start seeing the market pulling back and taking out that previous low, let's see, set on Monday, I believe it was, the 15th there, then that's the time that tells us, that lower high is leading to lower lows, and that's the time to really be defensive. So what are some ways that you can, if you're nervous about things, if you're worried that, we are going to see lower lows and see, the market start to take a second dive, what are some ways to protect yourself? Well, the first way you can protect yourself is by utilizing contra ETFs. Now, we've talked about contra ETFs quite a lot here on our streams, and we're just going to quickly revisit them, show you where you can find those very easily, so you can, save yourself a lot of time and get right into it. So we'll go down to the picks. Under the picks, you can go to either premium watch lists or featured screens. For right now, we'll take a look at premium watch lists. And under the premium watch list, we have 2 watch lists that were actually built based on your recommendations and based upon what we do here every Thursday. And we have the Contra ETF watch list. So if we go ahead and open it up. And now Contra is just simply standing for contrary to whatever the underlying fund is. So, if the market's going up, these are contrary to that. These will go inverse to that, if you will. So if you're looking at the S&P, for example, and the S&P goes up 1%, a contra goes down 1%. The great things about ETFs is you also can add leverage to it without having to use margin or without having to do, specific things for your portfolio that you'd have to typically do elsewhere. So with leverage, you can get 2 or 3 times the movement of the inverse. So for example, going back to the S&P example that we just mentioned, if the S&P goes, let's say, down 1%, a double leverage ETF will go up 2%. A triple leverage ETF will go up 3%. So the great thing about ETFs is that not only can you, play the opposite side of the market or play the downside of the market, but you can also give yourself a little bit of a boost by utilizing that leverage there as well. So essentially what you'd be looking for is, if you're somebody who trades heavily in tech stocks, so the NASDAQ mainly, then what you'd be looking for is a NASDAQ ETF or contra ETF to offset those types of stocks. If you're more of somebody who trades the S&P, you'd be looking for an S&P ETF, and same with the Dow. So as you can see, DOJ is our first one on the list. If you're not familiar with what it is or if it has leverage, if you're just getting started with contra ETFs, all you got to do is just simply click on it, go to the 3 dots in the upper right, and you can go to the view report. And in the view report, right under the business description, it'll say whether or not it has leverage. If it has leverage, you'll see it noted here. So it's a ProShares Trust, ProShares Short, Dow 30, just simply an exchange traded fund. Okay, so no leverage mentioned. If we scroll down here, we get, let's say, DXD. You see Ultra or UL Short 30, so Dow 30. Take a look at that, go to the report. And here, investment seeks daily investment results before taxes or fees and expenses that correspond to 2 times the inverse of the daily performance of the Dow Jones Industrial Average. So here, if you're somebody who invests heavily in the Dow and you want to protect yourself, this is a 2 times leverage. Shows the Dow goes down 1%, this goes up 2%. So essentially what it can do is allow you to have to take a smaller position utilizing the leverage to offset the losses in your core holdings or your main stocks if they start going down. So therefore you don't have to use nearly as much capital to offset the difference between your long positions. And, this can actually lead to having even a gain in a downturn in the market or a pullback in the market, because if you have more of this than you do, or if you have really good Dow stocks and the Dow goes down, the overall index goes down a lot, but your stocks don't go down nearly as much as the average, then this could help offset that and actually help you be ahead of the market when the market starts to reverse and starts heading higher again. That's the great thing about utilizing ETFs like this. Jolanda, once again, as always, we will save questions about individual stocks towards the very end. So if you want to take a look at SGMO, just stick around. We'll make sure we answer that for you. All right. So that's DXD. Let's go see. Let's say we wanted triple leverage, SDOW. Once again, you see Dow in the name. Tap on it. Go to the view report. And here you can see 300% or 3 times, which is triple leverage here. So as the DJI goes down 1%, this goes up 3%. Once again, reducing the amount of capital you have to invest in this to offset your core holdings. But at the same time, because of that extra leverage, it does include a little bit extra risk. Because if the market, let's say, bounces and makes a new high, this is going to go down 3 times as fast. So, these aren't really for the more conservative investors. These are for somebody who's trying to make a profit in a down market. So if you're more aggressive, if you're more short term, want to take advantage of short term pops and drops, triple leverage ETFs are going to give you the best returns, but also come with that additional risk. So, make sure you ask yourself, are you comfortable with taking that much risk? If you are, great. If you're not, simply look at, singles or doubles. Either one would be good for more of a slower style of investor. Individual losses, can they be offset by ETFs? So, Kat, not on the individual stock itself, but, if let's say your basket of stocks starts going down, you have one of these going up. So therefore, this is going to offset the loss on the overall portfolio. Those individual stocks will still go down, but when you get out of it and then you're still holding those stocks at the bottom of the market and they start going back up, then you'll get those gains back plus that additional gain you had from the contra ETF. Stocks with lawsuits, does it work if not investing in a segment like tech or pharma? Yeah, Jason, you can still use this same approach if you're not specifically trading one area of the market. This was just a good idea to help people get started if you're new. If you're majority looking into, let's say tech stocks and you don't realize it, that's a good place to start, is looking at the NASDAQ ETFs. But yeah, you don't have to, stick with the ETF that fits to one specific area. There's lots of different contra ETFs out there. We've talked a lot about them. You can go back and check some of our videos if you're interested in more details on them. But yeah, you don't have to, only invest in tech stocks so you can trade the NASDAQ ETF, for example. So yeah, first tip, utilizing contra ETFs. The second tip, if you're more of an aggressive trader and you have margin on your account, shorting stocks. Shorting stocks does come with a lot more risk, but once again, as we talk about week in and week out, as long as you're using stop criteria to manage your positions, you can limit that risk by utilizing that. So let's go ahead and take a look at where you can find those. So if we go back to the picks, come down here, we go to the featured screen section. You'll find one of our most popular ones, new sell rated stocks. So as we mentioned earlier, every day we give a buy, hold, and sell rating on each stock every single day. These are a list of all the stocks that just hit that sell rating. As you can see, Biogen, which is a very big name in the biotech industry, just hit that sell rating as of today, down 5.25%. We go take a look at it. Really good fundamentals, just the timing is not there. We take a look at the graph real quick. Let me switch this over for you guys. Take a look at the graph real quick. You can see a nice steady decline. Lower highs, lower lows. So if the market starts going down even more, if the market starts selling off, you can expect that this stock will be, hit harder than a stock that's been consistently going up. Because people want to sell their riskier investments or going down. There we go. When the market starts going down, people want to dump their stocks that aren't doing that great. Well, this is a stock that hasn't been doing that great. That can give you a great opportunity here. All right, let's go ahead to the next one. HRC. Once again, decent fundamentals, just the timing. People are booking profits. You see lower highs, lower lows. It's below that 40-day moving average. The RT's below 1. So if the market starts going down, you can expect to see the majority of people who are still holding this start to book their profits or reconsider, which is going to accelerate that downturn in these stocks. So if you're not familiar with shorting and you're not familiar with how the mechanics work, I would definitely recommend talking to your broker, because every broker is a little bit different in the way they set it up and what they can allow, what they don't allow. But for the majority of these stocks, these are all, higher dollar stocks for the most part, that you shouldn't typically have any issues being able to short through your broker. Let's see. So Ravi's saying, hypothetically, if somebody has, let's say, 100,000 in investments, how much should be invested into non-leveraged contra ETFs? So, Ravi, there's a whole presentation that we've done in our VectorVest University talking about how to identify, how much is enough to cover your positions. I don't have enough time here today to specifically get into that. But give our support a call. Ask them about the VectorVest University, which is where all of our strategies of the week are based in. And there is one by Jim Penna. I believe it was a year or two ago that he did this. But he has a whole formula that he comes up with to help you with that. Specifically, whether you want single, double, or triple, and how much you should do. What question? So basically that comes down as the same thing. That answer should cover you and Ravi there. Regardless of whether you have a 10K portfolio or a 100,000 portfolio, it's all about percentage basis. And that same answer would apply for you as well. So give our support a call, check that out. They'll help you out with that. I don't have enough time to get into the formula and the math behind it to, give you an exact answer. Unfortunately, we got a lot of other people here that we have to make sure everybody gets all the information they can. But if you want more information on one specific part, as always, folks, give our support a call. They'd be glad to help you out. All right. So with that, step 2, shorting stocks. Now, if you want to find something else other than new sell rated stocks, you can always go to the more feature, go to the screener, choose explore screens, and you have another one in here, worst stocks above 20. As you saw just a second ago, I forgot to show it, but you have a quick description. So it finds stocks over $20 rated as a sell with the worst VSTs coming to the top of the list. As you can see, the screen is intended to find stocks for short selling. So as you take a look at it, you can find a few other candidates that weren't in that list that we just saw. So taking a look, poor fundamentals. Look at these indicators. RV below 1, so poor long-term potential. RS below 1, poor safety, so a lot of risk involved with it. Timing 0.33 in a really strong downtrend. VST 0.54 or 53, so stock is not favorable. Taking a look at the graph, ask yourself, if you were shorting this stock, could you have made money with this? Most likely the answer is going to be yes. Jolanda, once again, stick around to the end. We'll make sure we get that covered for you. Don't worry. All right. So we have ARVN is one candidate here. NXTC, let's go to a 6-month. Look at that. Just consistently moving lower, giving you plenty of opportunities to take advantage of the downtrend in this one. FSCT, a lot of volatility, but overall moving lower. So you can go through, one after another and really figure out which one is best for you. Everybody's different. Some people may like ones that are, more volatile. Some people may look for more consistent downtrends, but all of those can be found here. You just got to pick and choose which one's right for you. All right. So that's step number 2. Just what does shorting a stock mean? So Sammy, great question. I forgot to cover that. Thank you for asking that. A lot of people may not be familiar with that, especially if you're new to trading, new to investing. So short selling is basically just the opposite of what you do when you buy a stock long. In a very simplistic way of looking at it, you are borrowing the shares of a certain stock from your broker. So the broker has to have those shares available. You borrow those from your broker. You sell them at, let's say, $100 to Johnny that you don't know. You just sell them out in the market. Somebody buys them. Johnny buys them out in the market for $100. So you just sold him the stock. Well, you got $100 per share. Let's say, you had 10 shares. So you got the $100 times 10, and then he had those shares now. Well, the stock goes down, and all of a sudden it's at 85. Johnny's saying, oh man, I don't want to be sticking around. This doesn't look great. I want to get out. I'm going to sell my shares back. So he sells them back to you at 85. So he originally paid you 100, you buy them back from him for 85. You just made a $15 profit on those shares. So that's how you make money in it. As the stock goes down, you make money as the stock goes down. If the stock goes up, that's where things get a little dicey because, theoretically, if a stock goes up, a stock can go up to infinity and beyond. And you don't want to be holding that stock as a short if that happens. Whereas you have, the low end of stock or the lowest a stock can go to is 0. So you have a hypothetical or a theoretical profit maximum, and you have a hypothetical infinite loss. So that's why people say it's a lot riskier. But as we talk about managing and following a systematic approach to investing, utilizing stop criteria, utilizing tips to know when to sell, that will help minimize that. So therefore, it's never really going to be a reality that you have an infinite loss. But it is possible, so that's why they say that, and that's why people see a lot more risk involved with it. Covered short sales. So yeah, same situation there, Albert. Sell short. What happens after you close the position? Do I have to buy it? So let's see, as you buy a stock to open it and you sell a stock to close it, as most people would typically look at as, the regular investment is what most people think of an investment. To short a stock, you would have to sell to open and then cover to close. So, different brokers have different verbiage that they use. So that's why if you're, getting ready to short a stock, if you've never shorted a stock before, I highly recommend to call your broker. Make sure you're just familiar with the terminology that they use because it can be slightly different. So just make sure you're familiar with what verbiage they use so you're putting your orders in the right way through your broker. So with that, also, if you guys have been enjoying today's stream, I see we've got about 300 people out there right now. Make sure to hit that like button. Make sure to hit that share button as well, because all that helps me and shows me you guys are enjoying our sessions. So if you are, don't forget to hit that like button and also share it with your friends, share it with your family. And that's the general thought to it. It is more risky in a sense, but not really more any time consuming than just trading a stock like you normally do. But yeah, it can definitely have some great upside potential. So that's step number 2. So just to quickly recap, buying contra ETFs to offset some of the losses in your long positions if you don't want to sell them. Tip number 2, you could short sell a stock or you could short a stock to offset some of those losses in your long positions, because those will go down as the market goes up. Those will go down as the market, those will go down as the market goes down, which creates profit for you. Tip number 3, and this is where we're going to get into the options side of things. I'm not going to really get into a lot of specifics on options because there's a lot of different moving parts to them. And especially if you're new, I don't want to overwhelm you with information. But I will say that, if you like the aspect of options, give our support a call. VectorVest does a phenomenal job, whether you're brand new to options or you've been a long-term options trader. We have a few classes that we teach that are great to help you, really improve your options trading. But essentially, put options. Put options go if you buy a put option on a stock, the stock goes down, put option increases in value. It's like an insurance plan, essentially. So the way you can use in a put option is if you're worried about a stock that you have some decent gains in, you want it to be a long-term holding, but you don't want to sit through a long pullback in a stock, you can utilize a put option as an insurance plan. So just like your car insurance out there, you pay a premium of a specific amount, and if the stock gets hit or gets hurt, then that premium, that insurance plan that you bought with the put options will increase in value, offsetting those losses in the individual stock. And just like an insurance plan, if you hope to not have to use it, but it's a great way of protecting yourself, if you will. So an option is covering 100 shares of a stock. So if you have 500 shares of a certain stock, you want to buy 5 put options to offset that. If you have less than 100, you can still buy a put option out there, because it costs on average about 1/10 of the price of buying 100 shares of a stock. So you can still buy that out there, but just know that, if the stock goes up, that option will lose more value than the stock would. So you may lose a little bit there, but just like with insurance, you lose some of that, you pay that money out there. You're losing that money, but just in case, to keep yourself protected in case something bad actually happens, you have that protection built in. Let's see. Yeah, Ivan, that's not a bad way of going about it. Kat, and actually, we'll get into that in just 1 second. So that brings me up to our 4th tip, which we'll talk about in just one moment. But yeah, so put options are a great way to help protect yourself. Some general rules of thumb that we talk about here at VectorVest is, if you're buying a put option, you're not, as an insurance plan, you're not really buying it to try to play the market aggressively and try to make a profit in the market. You're just trying to, keep your long positions afloat. Some of the general rules of thumb are, don't buy a put option at the money. Buy it, 1 strike out of the money. That'll help reduce your cost, but still give you some decent protection. And in general, look at, 30 to no more than 60 days out typically. Because if you think about what the market does, the market has short, severe downturns that typically aren't drawn out over months and months at time. So if you want to help reduce your premium that you have to pay, cutting your time value will help you do that. And also you have the ability to roll out options, and that extends your expiration date out. So you can buy a little bit more time if you need it. But in general, 30 to 60 days out as a insurance plan is a good rule of thumb to follow. There's definitely some caveats to it, but if you're you're a heavy option trader, or you're somebody that trades options quite frequently, you're well aware of these and you're not too worried about that to begin with, because you have most likely some rules in place of what you're looking for. And then finally, the 4th option. The 4th option is just simply selling your stock outright. If you're not comfortable with what's going on in the market, if you're worried about all the headlines, all the news that's constantly coming in, you have some really good gains out there, you can always take that profit off the table. And this goes back to what you were asking, Kat, of saying selling to match day's gain to keep profits is what I've done. Not sure if that's right. And so, yeah, if you're not comfortable with that, you can always sell your stock. You can take your profit off the table. Now you have an unrealized gain and turned it into a realized gain. Only downside is that if that stock turns back around quickly and starts moving higher, you may miss out on some profit opportunity. But if you're not comfortable with it, to remove your emotions out of your investing, that is the safest way you can do it, because your cash won't be hit. Your stock would be. Buffett dumped a lot of stocks and bought back. What are your thoughts? So, that's the great thing about it. You lock in your profits, you sell a stock, you lock that profit in. Well, now you not only have, let's say you put $1,000 into it. You not only have the $1,000 that you put into the stock, let's say you made 10%, so you have 1,100 on it now. Well, now when the stock goes down and then it starts turning back around, you now have 1,100 to reinvest into that stock after it's sold off at a cheaper price. So you can buy more shares and you can put more money into it and buy more shares at a lower price. So yeah, it's a great way of doing it. Once again, only downside to selling the position is that you miss out if the market, doesn't go down. You miss out on a potential profit, but You can never go broke taking a profit, first and foremost, and you can always get back into the stock at a later time. You can't, unless somebody has created the time machine out there, which I'm not aware of currently. But if you are, send me a message, let me know, because I'd love to hear about it. But you can't go back in time and say, I want to sell this stock at X price. So be careful out there. Don't hesitate to take your profit. If you're not comfortable with it, lock it in. Simple as that. You can always get back in, but you can't go back in time and get out whenever you wanted to in the past. So hopefully that answers your question on that. What is the MACD indicator, the black or blue line? So Marlo, you can change the colors on a MACD indicator. So I'm not familiar with the black or blue line, but you have a MACD line and then you also have a signal line. So when the MACD line goes above the signal line, that's a buy opportunity in a very simplistic form of it. MACD line goes below the signal line, that's a selling opportunity. If you want more info specifically on the MACD indicator, I definitely recommend to go check out investopedia.com. It's free and it'll give you a breakdown of all the math, the formulas, and different ways of utilizing it as well. Steve, welcome. New to VectorVest. I was wondering where we would look on VectorVest to see stock recommendations prior to the market opening, to give us an advanced heads up on which stocks are on the uptick. Steve, if you're looking specifically for that, give our support a call. They can walk you through it. You do have certain ways of utilizing that, at looking at pre-market data. But just give our support a call. They can help you find exactly which stocks it would fit you best. Awesome. Glad to hear. That's awesome, Kat. Well done. It's up 35% on S&P, 65% fixed, brokerage managed, too conservative. Awesome. All right. So with that, let's go ahead and finish off today's session. We've already been 45 minutes in, specifically just on the topic alone. So today's session was a little longer. Hopefully you guys have been enjoying it. Hopefully you learned something new. If you did, don't forget to hit that like button. Don't forget to hit that share button as well. Also, go on the VectorVest Facebook page, turn on notifications, hit the like button, all of that, so you get updated on every time we go live and all the info that we have for you out there. Stay up to date with all of it. But with that, let's go ahead and get to the fan favorite here, where we'll analyze any stock that you want to take a look at and show you how you can do so in less than 20 seconds. Now, Jolanda, thank you for sticking around. I know you've been asking about SMGO quite a lot, so we'll start off with yours and we'll jump into the analysis. So give me 1 second. Let me just take a quick drink because I've been talking a lot here today. There we go. And let's go ahead. Now, if you're not already a subscriber, we do have a link in the pinned comment, so you can click on that, download the link or download the app, try it out for 2 weeks for free. But if you already are a subscriber, once you get into the app, you just simply hit on the magnifying glass, type in your symbol. So SMGO. Wait. Let's see. Thought it was SMGO. Was I wrong? Let's see. What was the symbol? Just going back through chat real quick, trying to find it. Uh-oh. Let's see. Where was it? I can't go back that far. So let's start off. Let's see. SNGO. Let's see. SGMO. Yeah, there we go. SGMO. All right. So looking at SGMO. Now, when analyzing a stock, we take a look at 4 indicators to help keep it simple. There's a lot of data out there that people can get hung up on and spend hours upon hours to analyze a stock. We want to keep it simple here at VectorVest, so that way, we can save you time and help you have more free time to go do things you'd rather be doing. Because in today's fast-paced world, People seem to not have enough time to do anything anymore. So above 1 is going to be favorable, below 1 is going to be unfavorable. If you can remember that, VectorVest is going to make your life a lot easier. So first indicator we look at is the RV, the relative value. This is looking at the long-term price appreciation potential of a stock over the next 1 to 3 years. So below 1 tells us it has poor long-term potential, over the next 1 to 3 years. The next is the RS, or the safety factor, the risk factor, if you will. Below 1 tells us there's a lot more risk compared to the average stock out there. Then we look at the timing, 1.46, really nice strong uptrend. So this is a speculative stock, but it has some decent momentum behind it right now. Overall, the stock's about average. It's not great. It's not, really strong. The fundamentals are definitely lacking, but the timing. So it's a momentum play. Now, let's go ahead, dive into it, take a closer look at the chart real quick, and just ask ourselves. Right now, we see price has been on a nice steady run. You're starting to see, lower highs, potentially lower lows. By definition, starting to change it from an uptrend to a downtrend. It's just fallen below its 40-day simple moving average, which is one of the tips we talked about just a couple of weeks ago. And then the RT is still above 1, but it's not continuing to strengthen. It's actually starting to move lower. So that definitely brings us cause for concern. That tells us that momentum is waning. It's still in an uptrend overall, but momentum is definitely waning. Now, if you're not comfortable with that, we talked about 4 ways of protecting yourself today. But, the true decision on whether or not you should sell it or you should hold on to it comes down to you as an individual. Nobody is going to be able to tell you what to do because nobody knows the position like you do. So, but go through, last week, I believe it was last week or the week before, where we talked about 4 tips on knowing when to sell. Review that. Look at your stop criteria. What was your stop criteria? Has that been met yet? Utilize that. But based on the analysis, the RT is starting to weaken, showing momentum is waning, and you have poor fundamentals. So this has a lot of risk involved with it. If you have a really good gain, you have to make that decision. If you don't have a really good gain and you're already starting to take a loss on it, then the answer is pretty clear that right now may not be the best time to be into it. So hopefully that answers your question. Once again, thank you for sticking around. I appreciate it. Glad we got to answer that for you there. All right, now let's get into it. LVGO was the next one. LVGO, poor long-term potential, a lot of risk involved with it, but it's a hot momentum play. So you're most likely using your technicals to help time it. Therefore, on a technical basis, yeah, it's a great trade. On a fundamental basis, definitely not a lot of risk involved with it. Let's see, MVIS. MVIS, poor long-term potential, a lot of risk involved with it. Timing, it's in a short-term uptrend, but for something that's so risky, we really like to see that RT above 1.4 at minimum to show some really strong momentum behind it, because that momentum is not enough to offset the risk involved from the fundamentals. So therefore, the stock is not favorable currently. Tesla, TSLA. Tesla, about average long-term potential, good fundamentals, so less risk associated with it. Really strong uptrend right now, no surprise there. So overall, the stock's favorable. Awesome, thank you for that. GTN, let's go take a look. I haven't seen that symbol in forever. GTN, good long-term potential, about average risk associated with it. You have a steady uptrend, but taking a closer look, zooming into, let's say, 3 months, you see a lower high, be careful. If it reaches a lower low, by definition, that would be changing it from an uptrend to a downtrend, and you don't want to be sticking around holding the stock long as it starts to change back into a downtrend. So just keep that in mind and be careful of that. Let's see. BA, poor long-term potential, a lot of risk associated with it. On a short-term basis, you do have some upside momentum to it, but does appear to be waning just by taking a quick look at that graph at the top. Overall, the stock's favorable, but not by much. GNUS. Let's see. GNUS, poor long-term potential, a lot of risk associated with this stock. It's in a really strong downtrend. Overall, the stock is definitely not favorable. NKLA. Oh, LA. So, poor long-term potential, a lot of risk associated with it. Short-term uptrend, yes, but overall not enough to make this stock favorable. AMD. AMD, good long-term potential, great fundamentals, so less risk associated with it. Nice steady uptrend. Overall, the stock is favorable. Let's see. SHMO. Fat fingered it. And there we go. SHMO. Not seeing SHMO in here. SGMO, we did that. Awesome. Let's see. CLDR. CLDR, good long-term potential. A little bit more risk associated with it to get that long-term potential. This thing's like a rocket right now. It's going straight up. So be careful. That high momentum. If you're a momentum trader, if you're a technical trader, great. If you're not, this would definitely be something that, you have to ask yourself, is that risk really worth getting involved in right now? Overall, the stock is favorable because of that strong momentum, but if you want to reduce your risk, this is going to be one you probably look for another candidate for. Let's see, VIPs. Do ships. Is ship still trading? Or what was that stock, that shipping container stock that if anybody's here that's been in the Jockey Club for a long time, there's a shipping container stock that we traded a while back, made a killing on. Can't remember the name of it. Dry Ships, I think, was the name of it. But yeah, that was definitely a wild ride there. So looking at VIPs, great long-term potential actually. Really solid fundamentals, really strong uptrend. Overall, the stock's definitely favorable. What are your thoughts on LK? LK, basically following the suit with this one. Poor long-term potential, a lot of risk associated with it. No surprise there. It's basically falling like a rock. Therefore, the stock is definitely not favorable. Ship, let's go take a look at Ship. Let's go take a look. Ship has poor long-term potential, a lot of risk associated with it. It's in a sharp decline. Overall, the stock is definitely not favorable. WRTC. If I can type that in there. All right, WRTC. Poor long-term potential, a lot of risk associated with it, but it's a strong momentum play right now. So once again, same situation we've been looking at for a lot of them. If you're a momentum player, great. This is an awesome stock. If not, simply move on. INTC. So Selena's asking, where can I find the 4 tips? So Selena, if you go to our Facebook page, you'll see an option or category for live. Click on that. That'll take you to a history or an archive of all of our live sessions we've ever done here on Facebook. So, and you'll see the title screen there for it, and you'll see the ones, 4 tips to know when to sell, I think, or something around those lines. But all of our live streams are archived there on Facebook. So, and also, big shout out to our YouTube channel. If you guys have never checked that out, head over to YouTube, search for VectorVest. We got a lot of content there. A lot of these videos are now going to be starting to post on YouTube as well. That is something new that we're starting to change. So Glenn Tompkins is the main senior instructor that works on our YouTube channel. He does a lot of live streams there too. But they've done extremely well. And you can also find some of our Facebook live streams recorded there for you as well. All right, so looking at INTC, good long-term potential, or great long-term potential, great fundamentals. Steady uptrend. Looks like it's pulling back a little bit now, but still in the short-term uptrend. Overall, the stock's favorable. Let's see. How to ask questions. Bob, just simply type them in the chat. There's on average 300 plus people here. during our sessions, so I may not be able to see all the questions that come in. If I don't get to all the questions, just give our support a call. They can help you out as well. But I try to answer as many questions as I can that come in. All right, let's see. NOK. Nokia. Good long-term potential. A lot of risk associated with that long-term potential, however. It's in a really nice, strong uptrend, so therefore the stock's favorable right now. XSPA. XSPA. Poor long-term potential. A lot of risk associated with it. It's in a steady decline. Therefore, the stock is definitely not favorable right now. TER. TR, great long-term potential, less risk associated with it, really strong uptrend right now. Therefore, the stock's definitely favorable. I love VectorVest, but how can a stock with almost zero potential with very high timing be a buy? So, Bob, that is because momentum. If, VectorVest can give a buy, hold, and sell rating on every single stock out there. If a stock is speculative, so therefore RV and RS below 1, but there may be some rumors coming out that has that stock just exploding, as a day trader or a short-term swing trader, we don't want to exclude a buy rating for people that are those types of traders. So therefore, it still gets that buy because it meets the criteria of a buy. Because of that strong momentum. That RT is such a high value that it offsets the RS and the RV. So yeah, we want to be able to give a buy, hold, and sell rating on every single stock out there. So therefore we follow the rules. If the rules are met, therefore it can get that buy rating. And if somebody's an aggressive trader, we don't want to exclude them. We just want to make sure that we look at, if you're a conservative investor, if you're looking at a buy rated stock, you want to make sure that the RV and RS are both above 1, or at least for minimum, the RS is above 1. All right, let's see. BAC, Bank of America. For anybody who's been following me for a while, this is my favorite banking stock to trade. Let's take a look. RV, poor long-term potential, about average risk associated with it. Short-term uptrend, but not great. Overall, the stock's about average right now. Definitely not one to be into for the time being. We've definitely seen better opportunities out there. John, typing in mug. Wrong platform there, John. It was dry ships. Yeah, that's what it is. Thank you for that, Jay. Let's see. Regen, REGN. And we'll do 2 more for the day, and then we'll start to wrap things up. So Regen, great long-term potential, solid fundamentals, really nice steady uptrend, consistent uptrend. Therefore, the stock is definitely favorable. PLM. Whew. Who was that? Marcus. This is definitely a wild ride. PLM, poor long-term potential, a lot of risk associated with it, but you have some strong momentum. I mean, this would not be a swing trade stock if you ask me just by first glance at it. This would definitely be a day trade stock because you look at, just in the last few days even, you have huge movements, higher and lower, that you can take advantage of intraday. But as somebody who's trying to swing trade it, when you take a look at your broker, you take a look at your platform, you see the stock was at 60 cents and then all of a sudden closed at 40 cents. You're probably going to have some hard issues. So, just throw that out there. That's a huge move on a very low dollar stock. The average investor would not be able to handle seeing that much fluctuation in their portfolio. So I stand by that. Good stock for a day trade. Not necessarily a great stock for a swing trade. Let's see. And then finally, we'll do 2 more. So ALGN, good long-term potential, less risk associated with it, nice steady uptrend. overall the stock's definitely favorable. And then last one we'll go with OSS. I don't think I've ever seen that one come up. So looking at a new stock here. OSS, good long-term potential, a lot of risk associated with getting to that long-term potential. No surprise there, it's $1.75 a share. Lower dollar stocks typically have more risk associated with them. Simple as that. But you have a really nice strong uptrend on a short-term basis, so therefore the stock's favorable. Now, once again, if I didn't get to a stock that you guys wanted to analyze here today, if you already are a subscriber, just pull up the app, tap on the magnifying glass, type in your symbols. You can do this same analysis on the go, wherever you are, directly from your device. If you're not already a subscriber, just simply click on the link in the pinned comments, download the free trial. It's a 2-week free trial, risk-free. So download it, seeing is believing, put it to the test. Once you put it to the test, you see all the benefits that it can really provide for you. There's no doubt in my mind you won't want to continue to keep it and have it by your side. If anything, you're going to wonder how you did all your investing over the last however many years you've been doing it without it. And also, if you've been enjoying today's session, don't forget to hit that like button, hit that share button, share it with your friends, share it with your family, spread this knowledge out there. Help your friends, your family become stronger, better, and faster investors, making more sound decisions for themselves and avoiding some of the, general errors that the majority of investors make. And now if we quickly look at what's going on, still 3 ticks into the yellow, therefore the caution light is on. We take a look, we're 3 ticks across the board, still in an up situation for the primary wave. But now we saw more stocks advancing than declining when we first started. Now we're seeing more stocks declining than advancing. So this is why we like to see that 2-to-1 bias. We take a look, the Dow is now down about 0.25%. NASDAQ's still holding in there. S&P's going slightly more into the negative. VectorVest composite rolling over a little bit, only up 0.1%, so cut in half since we first started. So once again, folks, thank you for all your time. Thank you for all your support here today. I love being with you guys. I hope you guys enjoy your sessions here as well. My name is Patrick France, Senior Instructor. Take care. Have a great weekend. Also, don't forget, this weekend is Father's Day. So if you haven't already gone out to get a card for all you ladies out there, or if you haven't gone out to do something for it, make sure to do that. Being a father myself, it's our day this weekend to show some appreciation. So happy early Father's Day to all the fathers out there. And with that, have a great weekend. Enjoy yourselves. Be safe. And make sure to tune in next week at 11 a.m. Eastern as we kick off another session here on Facebook. Take care, everybody. See you next week.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.